everyone, welcome to Just Invest Today. In today's video, we are talking about these earning releases. Can you believe this? We have the biggest names coming out with their earnings this week. It's gonna be freaking crazy. This is on top of everything that's happening in the market. We know there's recession worries. We know there's the Ukraine-Russian war. We know there's inflation. We know there's interest rates. That's all having such a huge effect on the market. The market has been going down the last 6 months. The S&P has been down 6 to 7%. And you have to remember that Apple, Facebook, Google, all of these stocks that are having their earnings this week take up majority of the freaking S&P 500, almost like 20%. So just think about these companies having our earnings miss, on top of how the market is so bearish, sentiment is at an all-time low. This could be a very, very bloody week. Let's look at some of these earnings. So we have Coca-Cola, we have Activision Blizzard. Coca-Cola is an interesting bet because Coca-Cola has been going crazy. This is like the perfect inflation hedge for like so many people. They're like, oh my god, Coca-Cola is the safe bet. But when you think about Coca-Cola, you don't think about, oh, it's growing crazy, it's growing at these all-time highs, it's growing fast. But look at the stock, up 20% in the past 6 months. This is what's happening in the market. People are looking at Coca-Cola and being like, yes, this is a safe bet. But a company like Facebook growing 15 to 20%, no, we don't want that. The business is changing. The business is dead. So that's what you're going to have to prepare for. People are just not caring and they're just rotating their money into like infrastructure stocks, into Coca-Colas, into like railroads. They're switching their money up. So sometimes as investors and as shareholders of these amazing companies like Facebook and Google, you just have to take it with a grain of salt and understand that the algorithms are going to do what the algorithms are going to do. Activision Blizzard, we know Activision Blizzard, Microsoft is taking it under. Hopefully it goes through. Who knows it's going to go through. And when you think about it too, Microsoft on Tuesday after close, think about Microsoft. Microsoft is just a steady company. Can you imagine if this company doesn't do well in earnings? That's going to be a shocker. That might crater the market as well. But we have Google. Google has been getting killed in the market, man. I'm surprised it's even down 12%. In the past 6 months, it's down 12%. I'm down 15% in the last month. I'm shocked, man, because Google is one of those steady growing companies that you have two monopoly businesses in one. Like they have YouTube and they have Google search. Like, where are those businesses gonna go? And how is Coca-Cola selling for a higher multiple than Google? That's what you're seeing. That's how you know the market is just nonsense right now. It's not thinking logically, and it's gonna continue that way as long as interest rates are the worry, as long as inflation is the worry. People are just moving their money out of any tech stock. So you can see Google has been growing pretty sufficiently, and they have a huge cash balance. 23%, 18%, 12%, 41% in 2021. So let's see what happens in this quarter coming up. It's going to be coming out after close on Tuesday. I'm going to be glued to that. We're going to see what's happening. Then we have Visa's after close too. Another great company. See how the market or how people are spending their money. If people are still spending their money, people are still using their Visa cards, because that's going to be a telltale sign on how the economy is rocking, how the economy is moving. Then we have Spotify. Spotify is an interesting company because I think they almost pretty much have a monopoly like in their music field, but they don't really earn money, which is really weird because who doesn't use Spotify? It's either you use Spotify or like you use Apple. So like those are like the two competing companies, but man, when you look at Spotify, like look at the revenue growth, it's pretty solid. 28%, 16%, 22%. But the gross margins are kind of pretty low for just like a techie type of business, right? So it doesn't really make sense how they're not like earning really solid amount of money. Like they're in the negative, all their net income's negative. So it's a company that I like, but it's a company that I like use, but it's like uninvestable, which is really weird since Spotify has like a pretty much a monopoly in the music type business sphere. So it's an interesting play. I would love to own Spotify if it actually like produced money, if it actually was returning like money to the shareholders. We have Meta. This is oh my god. We have Meta and we have PayPal. Guys, if Meta does bad on these earnings, can you see the stock going to like what, 70, 80, 90? Like, Facebook has been getting killed in the market already. Look where Facebook is at $184 for no damn reason. It sold off 17% in a month for no reason. For just no reason. But people are saying that Mark is not focused on Facebook. He's just focused on Meta. He's focusing on AR, VR. He's extremely focused on something else. He doesn't even care about the main Facebook, Instagram business anymore. So that's how people see Meta. I understand why people are very bearish, but man, this business is earning crazy amount of money. It doesn't really matter how people see it. Like, what is the company really producing? What's the money generation from Facebook? Like, we know they generate crazy amount of net income. They know they're buying back a lot of shares. They're doing all the right things, in my opinion. I think the Meta bet is a good bet. Like, even if it doesn't succeed, they still have their main businesses. So Meta is a side option to Facebook and Instagram, because if they see that Meta and if they see that the VR and AR, like their whole field is not really taking off, and they're just freaking burning money after burning money after burning money after 5 years, I think they'll slow down the spend. Like, the CFO said that they'll slow down the spend if division or they just keep burning money. But Oculus has been growing over 100% year over year, so why would they slow down now? And VR and AR, there's so much potential there, so I don't even want them to slow down. I want them to spend more on AR and VR, because I still think there's a lot of potential there. PayPal is going to be a very interesting play, man, because PayPal, another stock that has been getting killed in the market. PayPal in a year is down 68%. Who would have thought PayPal would be down 68%? Because PayPal was always one of those companies that traded at a higher multiple, and you never really seen it at cheap prices. So trading at a 24 PE is very interesting. I want to see how the CEO talks about this business moving forward, because they're growing and they have growth expectations of 15 to 18%, but I still think Facebook is going to be growing faster and Google is going to be growing faster. So that's why I still haven't invested in PayPal. Because I'm like, why invest into PayPal when you have Google right here? Google has way more dominant than PayPal. So like, when you see both opportunities and you see the opportunity cost, it's just like, what? Why would I invest in PayPal when you have Google or Facebook right there? And I think Facebook is a stronger business. They have WhatsApp is one of the most dominant businesses. They have Facebook, one of the most dominant businesses. They have Instagram, one of the most dominant businesses. They have Oculus, one of the most dominant businesses right now. They have majority of the market with VR and AR. Meta, don't kind of discount that. That's huge. That's huge in a space that's growing crazy. That space is going to be growing 30-40% into the future. So keep your eyes open, see what happens, man. And I'm telling you, Facebook, I still think it's an amazing investment. Then we have Apple and Amazon to end it after close on Thursday. Man, what a week. And we know Amazon, man. And Amazon has been doing so much amazing things. Amazon's actually going to start competing with FedEx in delivery. Can you imagine that? Like, that's the next step with freaking Amazon. So Amazon's doing amazing things. They're going to be growing like crazy. I think the Rivian IPO is going to affect these earnings, because they used the Rivian IPO and they put that in their earnings. That's why their earnings was up like 1,000% on bottom line. So it was really weird. So I wonder how that's going to affect Amazon, if that's going to crash the market or crash the Amazon stock, because people are going to be like, whoa, since that whole IPO, Rivian has been down like crazy. So I'm not sure how that turns out. Apple, very interesting, man. Apple, very interesting. Apple's an interesting company because I don't understand. I understand why people are so bullish on Apple, because look, Apple has been going crazy. The last 6 months has been up 8%. Last year, 20%. So people see Apple as this amazing company. It is an amazing company, but the growth rate for Apple isn't very high. Like, people don't really have high expectations for their growth moving forward. I don't know, like people, like analysts don't even have these high expectations for the revenue growth of Apple, but they know Apple does amazing buybacks. They know they have a dividend. They know that they're still in amazing verticals and they still have a lot of potential, especially with their services. So I understand why people still like Apple. So next year, analysts expect Apple to grow 6.5%, which is not that much when you really think about Apple being such a strong company growing so fast and people have so much high hopes for Apple. I'm surprising it's not like at least 10, 15. Who knows? In the next 5 years is at 10%. Past 5 years has been 8%. So people have these strong expectations for Apple and continued growth, but man, I don't know how much I'm seeing that perspective as Apple is in that like sphere of being such a mature company that maybe we'll see what happens this earnings. Do really good or do really bad and maybe really hurt the market, make this market really red. If you thought it was bad, wait until Apple misses earnings or the revenue or something. Damn. We might see mayhem in the market. See how Apple does. Intel, Roku, both interesting companies. See how they play because Intel's doing a lot of investments. They have a lot of production coming up in the future. Roku. People are saying Roku's going to benefit from this whole Netflix debacle. So let's see what happens that after Thursday, after close. But before open on Thursday, we have Twitter. Twitter is going to be an interesting play because we know the whole Elon Musk fiasco. What is Twitter going to say about that? Are they going to go through with kind of what Elon proposed, or they're going to just kind of, or they're just trying to play hard to get? Someone's going to talk about it and say, oh, this is what we think about Twitter. And because, come on, do we really expect Twitter to have some kind of amazing earnings? Highly doubt it. I highly doubt they're going to do big things and they're just going to be like kind of under the radar. Their stock might crash like 10% because they only do like 5% revenue growth. Who knows? No one's expecting anything for Twitter, these earnings release, but there's so much stuff going on in this market. I'm excited. We have MasterCard, McDonald's, a lot of stuff, man. So guys, tell me what you think about this earnings release, man. I can't wait for it. Oh man, there's so much potential here. This can either go really bad or really good, man. This can either crash the market or give the market kind of some new life and some new like future perspective on these companies still being able to grow in this environment. So guys, what do you think about this video? Can you please like it, subscribe to my channel, and I'll get back to you in the next video. Peace.